Hey guys, how you going? You're here with Bo. Welcome to another video. Real treat for you today. I have an interview with Angus Morrison. Angus Morrison is an accountant here in Melbourne that actually specialises in cryptocurrencies. One of the few in Australia to actually do this. So it's a real pleasure for me to have Angus on the channel because it is such a specialist area in the tax space, and Angus has graciously given us his time to do this interview. So Angus, welcome. Thanks for coming on board. And why don't you tell us a little bit about yourself and your background and how you actually got into cryptocurrencies?
All right, Bo. Cheers. So I've been running this tax practice for about 5 years. Just doing general tax work, small business and that sort of thing, and got involved in crypto around last August, September, and got right into it. And so the interest in tax and crypto went from there.
So cryptocurrencies has a way of gripping people. Some people, when they get into cryptocurrencies, they might just invest a little bit. They might just have a little play. Someone might send them a little bit. Yep. What was your first experience, and what actually grabbed you about cryptocurrencies, blockchain, and where it was going in the future?
Well, I suppose what grabbed me was the research I did, and just reading and listening to things on YouTube. And just, I suppose, the underlying nature of Bitcoin and the blockchain. I listened to a lot of videos from Andreas Antonopoulos, Trace Mayer and Simon Dixon. They're all talking about, I suppose, partly the theories of sound money. Andreas Antonopoulos talks a lot about the third world and cryptocurrency and how that has a positive impact. And so sort of adding all that together just made a lot of sense for me. And I suppose I got right into Bitcoin. And I've been there ever since.
It's funny that that Bitcoin is what really seems to have grabbed you. I mean, it's what grabbed me as well. I've obviously, like other cryptocurrencies, I invest into other cryptocurrencies, but Bitcoin just seems to hold a special place. I think because of the foundations on how it was actually brought to life. With Satoshi Nakamoto still being anonymous and this incredible way of how it's so distributed, decentralized, and the fact that it's so well known and the power of it as well to actually change the world. How did Bitcoin kind of affect you in that way, and where would you kind of see Bitcoin in the future in terms of its development and maybe even its usage, because as you would know, it's largely becoming a store of value at the moment. What's your kind of take on Bitcoin as a utility in the future? Yeah,
it's a good question. I do see Bitcoin maintaining, I suppose, its essential property as being a store of value into the future, rather than being, I suppose, a currency that people are using every day. Obviously, people will use it a lot, but I think as a store of value, as digital gold, is where I think it'll obtain much of its inherent value. I think there'll be other coins that people might use more widely for daily transactions, but I think Bitcoin will be a store of value long term.
Yeah, interesting.
Yeah.
Now, you're based in Melbourne.
Yep.
Obviously, we're here in Melbourne doing this interview. So many of the people from my channel into crypto are from Melbourne. Melbourne seems to be the hub of cryptocurrencies in Australia. What's your kind of take on the kind of playing field of people into crypto in Melbourne? Is it as strong as what I think it is?
Well, it might be. It's hard to say, not knowing how strong it is around the rest of Australia. I mean, my feeling or understanding was that it was pretty big everywhere. So it's interesting you say that about Melbourne. Yeah, I mean, there's the Blockchain Centre in the city, which hosts meetups and so on pretty regularly, so that might have had something to do with it. But can't really explain why Melbourne's the centre of it.
Yeah, it's something I've wondered for a long time. There's obviously a lot of people in Sydney. There's quite a lot of people in Brisbane as well. But for some reason, the most people I get actually talking about cryptocurrencies actually come from Melbourne, which is really interesting.
Yep.
So getting into, I guess, more the tax side of cryptocurrencies and Bitcoin now, why don't you tell us a little bit about your accounting background and then the transition into crypto accounts, which is this new field that you've established now, and why you decided to get into that specific area?
Yeah, so I suppose it was a pretty natural transition because I've got into Bitcoin myself, so I needed to understand the tax implications of investing in it. And then it was just really a desire to get more involved in this space. You know, I mean, once you get sucked in to Bitcoin and crypto, you want to get involved. And I suppose, you know, the obvious way for me to get involved is to help other people through tax and crypto, and seeing quite a few people now want to set up self-managed super funds and that sort of thing, and you know, they want advice on tax and all that sort of stuff. So yeah, it just happened naturally.
Yeah, okay. So I guess getting into the meat of it then, so based on your experience, do you think that there are more people getting into cryptocurrency in terms of investment and setting up self-managed super funds? And do you think that people are kind of turning more to people like yourself and others as they're seeing long-term potential for cryptocurrencies as an investment?
Yeah, definitely. I mean, more and more people are interested. I think, obviously, you know, the price rise around Christmas last year and in December, you know, got the whole world talking, and then the price drop got the whole world talking as well. And so, you know, that probably scared off quite a few people because, I mean, the volatility has been so great. But I think, you know, hopefully as Bitcoin, whether it stabilises or keeps going up, or, you know, becomes more widely recognised, legislated for, so people can invest in it with more confidence, yeah, more and more people will come into crypto. Yeah, I've got no doubt.
Yeah.
No doubt at all. Yeah.
Now, touching on the legislation, as you said, so I kind of briefly covered the legislation around cryptocurrencies in my course, and I've spoken about it on the channel a couple of times. And the research that I had done, you know, it was great that the ATO had laid out some guidelines,
Yep.
but in terms of what they have for other assets, is really very minimal. What's your, I guess, interpretation of what they've put out? Is it enough? Has it changed much in the last 6 to 12 months? And where do you see that moving in the future?
Well, I think from where they've come from to where they are now, I suppose there's a little bit more clarity around how they see Bitcoin. I think the challenge is going to be possibly around a lot of the altcoins and the utility functions of those coins and how that works into a tax framework. I think that's something that will have to be addressed. I mean, with the ATO guidelines, they talk about Bitcoin or similar coins, and really, I mean, it's a very general statement. You know, there are thousands of coins out there, and you might argue that there are only maybe a handful that are similar to Bitcoin. So where that leaves tax on those other coins remains to be seen to an extent. But I think the basics of it is that if you're investing in crypto, you're investing in an asset. You know, if you sell that asset, it's a taxable event, and then the issues come down to, you know, whether you're in the business of doing that. So if it's on an income account, or whether you're an investor, and so if you held it for more than 12 months, you can get the 50% capital gains tax exemption.
Mm. So do you think that potentially, or maybe the ATO are trying to work that out, that they may actually view different subcategories or subclasses of cryptocurrencies, like utility tokens, like cryptocurrencies, like crypto commodities, like Ethereum, that may end up becoming different kind of brackets based on those classifications?
Yeah, I think from what I've seen so far, they'll probably just lump them together and just call them, you know, an asset for the purpose of trading, just like, you know, different shares. So I think where there's a coin that has a sort of separate utility, and that utility gets used in sort of regular transactions, like we were talking about Power Ledger before, and if I don't fully understand how that works, but, you know, where you've got a coin that's got, I suppose, a utility which you use other than sort of a hold of value or something that you're trading, then I think there's potentially there may be some tax implications through that when you're using that coin. If you just, you know, if the ATO consider you're disposing of it, that might be something to look at. But again, you know, you're buying an asset. If you sell it, or if you dispose of it in the ATO's eyes, there's going to be a taxable event. There may be issues around valuing those disposals. So yeah, we'll wait and see. Yeah.
So that's an interesting point, because many crypto tokens have been designed as an access token. So they've been designed in a way where X amount of tokens are required to perhaps access a certain feature within a decentralized application. That's part of that utility function. So that could create quite a complex scenario down the track if, say, an enterprise or a company buys some tokens to access a certain feature of a decentralized application as part of this new crypto economy, but the token appreciates in value from when they buy it to when they actually use it within the platform.
Yeah. And then if there's a disposal of that token through what needs to be done through that platform, if they've disposed of it, from the ATO's eyes, it's a disposal, it's a taxable event. If it's gone up, then there's a gain to be made and reported and paid tax on. But then if you haven't got that money through how that token works, it can become an issue.
And that could even get even more complicated down the track when you've got decentralized applications using crypto commodities like Ethereum for gas for transactions. So what if the Ethereum they're using for gas appreciates during the executions of the smart contract within the platform? I mean, how would the ATO even go about tracking and monitoring that kind of thing?
Well, it's a self-assessment regime, so that they would rely on the taxpayer to do that. So, I mean, if the ATO had a look at the taxpayers' affairs, then they'd be expecting some sort of record keeping to prove that.
And the thing is with public protocols like Bitcoin, like Ethereum too, is you've got permanent immutable records on the blockchain. They are pseudonymous, of course, as everyone knows that's in the crypto space, but those transactions are forever immutable on that record.
Well, that's going to be good. I suppose that's good from an ATO perspective.
Yeah, because, technically for years down the track, they could retrospectively go back and view things like that.
Yeah, for sure. I think the issues would be around valuation and more from the altcoins. I think tax and Bitcoin and sort of the major coins is going to be pretty straightforward.
Yeah.
But I think it's sort of more the altcoins and where you're moving between exchanges and that sort of thing, where you're going to have to be more careful.
Yeah. It's really interesting stuff. So what do you think the regulatory landscape is with the ATO and tax legislation right now? So we touched on that a little bit before. I guess how much maturity do you think is left in the space, and what would be your time horizon before you think things are really going to be ironed out, or is it still too early to call?
Oh, no. Look, I think, again, getting back to Bitcoin, I don't think there's that much complexity around the tax treatment of Bitcoin. I think the ATO have laid it out. They view Bitcoin as an asset. They don't view it as a currency. And the complexities are really around whether you're in the business of crypto trading or whether you're an investor. I think the continued development of the altcoins is something that the ATO will obviously have to keep having a look at and seeing how they treat that. I think in the whole crypto space, there's probably going to be more regulation, I suppose, from a financial perspective around ICOs and raising money and that sort of thing. Rather, from an investor point of view, I don't see there necessarily being a heap of changes which is going to have a big impact on investors. Yeah.
Okay. So what, I guess touching on then, the differences between there's a lot of different stakeholders in crypto at the moment. There's obviously you've got traders, you've got long-term investors, you've got companies raising funds for ICOs. You've also potentially, maybe not yet, but in the future, you'll have companies procuring crypto assets to use a decentralized application. What do you think some of the biggest challenges for crypto investors at the moment are going to be leading up to tax time, both now and in the future?
Yeah, so now, the two main ones now are obviously having your records and understanding what you've done, and secondly is coming up with the money to pay the tax. Yeah. So the issue that I'm hearing is that people have traded successfully, but they've gone from coin to coin, which and those trades are all taxable events, and so there's going to be tax has to be paid, but an altcoin is still being held. So the ATO obviously wants their money in Aussie dollars. Yeah. So at some stage, the investor is going to have to sell to pay the tax, and that's also going to trigger another taxable event, which may be a gain. And so, what we mentioned before, the risk that investors have is that, like, if you've realised a capital gain or an income gain this financial year, then obviously that gets reported and lodged in your tax return. But if you've held a coin Just like if you hold a share, which you think, well, I'm going to sell that so I can pay my tax. But if that coin goes down in value and you've got a tax bill due, then you could be left without having the money to pay the tax. So that's an issue as well.
Yeah.
So I think it's important that you understand your tax position as early as possible.
Yeah.
And then you can work out how you're going to pay for it.
So what do you think then, expanding on that a bit, so you've got kind of long-term holders that are going to be facing capital gains tax. Should they dispose, or if they've disposed? And then you've got traders as well, going from exchange to exchange, coin to coin on different markets. How best can people in either of those scenarios get their head around what they're in for? What are some of the tools or methods they can do to prepare?
Yeah, the best thing to do would be to use some software like coin tracking, which tracks all your trades, and you can download reports, gains, profits and losses and that sort of thing. Or if you're not into using software, you've just got to use it on a spreadsheet or use a spreadsheet.
So people can essentially export or copy their trade history from exchanges, say into a spreadsheet, and then maybe grab some data from Bitcoin's price valuations and peg it.
So the ATO guidance is that the value of the coin in Aussie dollars has got to be from a reputable exchange. So if you're trading, if you're going from altcoin to altcoin, then you're going to have to tie the values of those altcoins back to Bitcoin on that date. And then, or not necessarily Bitcoin, you could use Ethereum or Bitcoin Cash or whatever. And then tie that back to Aussie dollars. Or, I suppose you could use CoinSpot, because CoinSpot has a lot of altcoins, but the prices of CoinSpot can be a little different. So as long as you're using a major exchange and you can tie the price back to Bitcoin, for argument's sake, and then from Bitcoin to Aussie dollars, then you should be right. And as long as you can back that up with your records, I'd use Independent Exchange for an example, where it's got the daily records under the Markets tab, and keep track of those prices. And obviously best, if you can do it whilst you're trading, it's going to make your life a lot easier. Rather than waiting till the end of the year. But
so actually, like, recording each trade as you go against the price of Bitcoin, and then against the price of what the Bitcoin valuation was in Aussie dollars at that time as well.
Yeah, if you're trading altcoins, if you're going from altcoin to altcoin, then you'd probably do that. I think tracking Bitcoin to Aussie dollars is going to be pretty straightforward. There are going to be a large number of sources for that. It's more the altcoins, but if you get onto Bittrex or Binance, and you should be able to work out the historical value of that altcoin compared to Bitcoin, and it's just a calculation process.
And one thing that CoinMarketCap has, which is a great feature, is it allows you to display different markets in multiple fiat currencies. So let's say, for example, you went to an altcoin to Bitcoin market. You can actually display what the value was in Aussie dollars at that time and use that historical data. Do you think, though, that the ATO would use that as a reputable exchange, or would that, because it is an average across exchanges, and if it's an altcoin that has major liquidity problems, you could have major price variations between exchanges? Would you be able to use that data, do you think?
It's a possibility. It would partly depend on the coin. I think it would depend on the circumstance. If you were trading an altcoin which wasn't on many exchanges and there was variability between those exchanges, then if you couldn't get the data from the exchange you were using, you could possibly use that. The argument would be, well, why don't you just use the exchange that you've been trading on, and what was the value in Bitcoin at that date?
At that date.
But if for any reason you couldn't get the data, then it may be okay. As I said before, it's a self-assessment regime or way of doing things. So the question would be, if you presented that to the ATO, would they tick it off? I don't know. It's a reasonable method, but it's not a reputable exchange because it's not an exchange, so they might say, we'll go back. Having said that, if you did that, there's not going to be a lot of difference between what's on CoinMarketCap and what's on another exchange. So it's not going to make a big difference to your tax position.
Do you think the ATO is going to have a period of leniency or tolerance for this, or do you think that they're going to really put it back on the people doing the investing and expect the same level of reporting requirements as the older assets, even though we are in such a new...
Yeah, absolutely. I don't see why they'd show anything else, because you know the prices are there on the exchanges.
Yeah.
So I don't expect any leniency. Yeah.
Good to know. So Angus, self-managed super funds. This is a big one now for Australians as they're looking to take more control of their supers, to perhaps even take more risks with their own super funds and what they're willing to invest in.
Yeah.
I covered this in my course, and I personally have a self-managed super fund set up, and I have bought Bitcoin, but it wasn't easy to do.
Yeah.
I did this quite a few months ago, before there was a lot of people actually setting up self-managed super funds on sort of my behalf or on customers' behalf. Yeah. What's your sort of take on that market at the moment? What are the trends you're seeing? And is there a good frameworks in place now for people to actually have self-managed super funds set up and to invest that into cryptocurrencies?
So the take on the market is that it's definitely an area of interest. I mean, there are a lot of people who are interested in crypto, and also they might have worked for a number of years, so they've built up money in their super. So definitely seeing inquiries from people around self-managed super and Bitcoin. It's a very highly regulated area. It's highly regulated without getting into crypto. So you've got to be really careful. Because I'm not a financial planner, so I'm not allowed to say anything that may prejudice a decision about whether you should set up a self-managed super fund. So I can talk about the rules. But it is possible. It is within the rules. You can, obviously you've done it. I've done it as well. A few things you've got to watch out for. You've got to have a trust deed, which is the rules of how your super fund works. And when you get a self-managed super fund, you get a trust deed from a legal provider. Your accountant generally organises it. And that trust deed has to, or doesn't have to, it should have reference to cryptocurrency. It's better if it does. It might have reference to or any other asset or something like that, but the deed with the law firm that I use has specific reference to cryptocurrency, so that's important, I think. Then there are issues around the security of your assets, because if you're the trustee of your own self-managed super fund, you have to conduct your affairs or the super fund's affairs with a reasonable degree of care and diligence and competence. And so obviously one of the big issues with crypto now is security of coins, coins on exchanges being hacked and so on. So you've just got to be super, super careful around the security of your coins, and you've got to prove that you are taking care of those coins, because if you're not exercising enough care. So there can be penalties involved and so forth. Another issue is making sure you can prove ownership of the coins, because you get set up on an exchange and you buy some Bitcoin and you want to buy an altcoin, and it may not be on an Australian exchange, so it might be on Bittrex or something like that. So you set up an account. How can you prove that your super fund holds that account on Bittrex? It's not that easy. So I would urge great caution if you want to use your super fund for crypto in terms of using other exchanges, because it's not necessarily going to be easy to prove ownership of those coins if you use an exchange where you haven't specifically set up the account in the exchange in the name of your super fund. So be very careful with that.
And there's only a couple of exchanges I think that I know about that actually allow additional registration kind of opportunities, and that I think Independent Reserve is one that actually allows you to register things in the name of a trust or a business or a company.
Yeah.
So that would be important too.
Yeah, exactly right. I mean, I'd be very hesitant running a super fund and holding altcoins. I'd just, and as an accountant, I just want to, ideally help people with super funds where they're just using an exchange in the name of their super fund, because the risks are quite great. Yeah. So you've got to be careful. And then, the other thing with exchanges and, wallets and dealing with those sort of things, the super fund has to, or should own the wallet. There shouldn't be anything else on that wallet other than the super fund's assets, all that sort of thing. So it's best to keep it well, simple, but be really, really careful with a self-managed super fund.
So Angus, investing into cryptocurrencies is obviously risky to begin with, even with your own funds at the moment.
Yeah.
How does the governing bodies around self-managed super funds and the ATO, how are they seeing cryptocurrencies in terms of risk level? And where does that kind of sit, do you think, with them, based on your experience, in terms of these other alternative asset classes that people invest into with their supers?
Yeah, I haven't seen any particular guidance on self-managed super and Bitcoins and risk profile by the ATO, but I can only imagine that they would consider it risky, because it is. The thing about self-managed super is that there are a large number of assets that you can purchase, some of which may be considered risky, but it's within the rules, and crypto is one of those assets. So you are legally allowed to do it, but one of the things that the ATO absolutely require is an investment strategy, which is a written strategy which documents the reasons for your investment, what your sort of risk profile is, and how your investments tie up with your overall retirement planning, because your superannuation and your self-managed super fund is run for the sole benefit of you and your retirement. So it's absolutely paramount that you've got an investment strategy which is properly written and documents your crypto investment and why you're doing what you're doing.
So one thing that really interests me is Bitcoin ETFs.
Yeah.
And cryptocurrency ETFs. So at the moment, you can see the Winklevoss twins, they applied years ago to have a Bitcoin ETF. And you can see that in the background, they're really trying their best to improve the regulation, the quality of the exchanges, and even establishing the WinkDex, which is an index for the Bitcoin price, in addition to Bitcoin futures starting in November last year as well. We can kind of see the foundations and the mechanics of ETFs just around the corner. This is the early days. These are the foundations that these guys are trying to push in. Now, one thing I believe that in the future, not only are you going to have Bitcoin ETFs, but you may have super schemes, potentially actually investing into cryptocurrencies as an alternative asset, maybe a medium to high risk asset for the early sort of high growth strategies for people. Do you think they're ever going to go down that path? How long do you think it's going to take for these super schemes to be willing to take that risk to start investing into cryptocurrencies?
Yeah, so hopefully it'll become an option. I don't think the industry funds will ever do it, obviously, but some of the retail funds, it's a possibility. It would just be a very small portion, I'd imagine. I mean, you could posit a really good argument for it, because it's a hedge against the market in terms of the ASX or the stock market, because the Bitcoin price won't necessarily track the ASX, which a lot of investments do. So I think it could be a good reason for funds to do that. It can lead to funds sort of averaging out their returns, which is what they want, because they don't want volatility, because people pull their funds out. Whether it's going to happen or not, and when, I'd love to see it happen, and hopefully it does happen in a few years. I think Australian ETFs, look, I don't know how far away they are, but there'll be managed funds that you can invest in through crypto. There already are a couple now in Australia. Right. And more will come on board, and providing it's all regulatory compliant, then self-managed super funds may be able to invest in those managed funds, and whether a managed fund that holds sort of more standard investments, but then invests, say, 1% of their capital, or a minuscule amount into such another managed fund, it could happen. Yeah, we'll wait and see.
That's one of the things that I think interests me the most is the development of on-ramps for major institutional money. I think that's one thing that really excites me, because I think with the cryptocurrency space, you've seen retail investors are the ones that have got in first. Yeah. And you'll see the institutional money start to come around the back end of that.
Yeah, yeah.
A bit of an off-the-cuff question, and maybe not related to tax, but one I'm still interested to hear your thoughts on, is people getting paid in Bitcoin.
Yeah.
How do you think that's ever going to become an option? where people can tell their employer, I don't want to be paid in
Yeah,
Australian dollars, I want
yeah.
to be paid in Bitcoin.
Yeah, yeah.
And what do you think the challenges would be for employers to actually do that?
Yeah, well, the challenge for employers, yeah, that's going to be an interesting one. Whether people get paid in Bitcoin. Look, I did hear a story a couple of weeks ago about someone I know sold a Tracer to someone because they had a spare, and my friend asked, "What are you going to use the Tracer for?" And the person who bought it said, "Oh, because I'm a contractor and I just work with other contractors and we all pay each other in Bitcoin." So,
wow.
So yeah, that was quite interesting. Whether an employer, I mean, is going to pay someone in Bitcoin, I don't know. I think the difficulty is that just the volatility of the Bitcoin price. So whether employers want to get paid in Bitcoin is another matter if the price goes down.
Yeah.
And then obviously, the employer has to have it, be on exchange and to manage that process. So I'd say it's, unless it was sort of a crypto area, it's unlikely.
Yeah.
It's going to be hard to work it through the payroll system.
I can imagine it would be challenging, but wouldn't it be cool to have? I know there's crypto enthusiasts out there that if they had the option, they probably would be doing it. And like you said, it's an interesting one about the volatility, because I guess for the employer, if the price is going down, they would need to be pegging the employer's or the employee's wage against the price of Bitcoin at the time. So if it's gone down,
but then you think if someone signs up to get paid in X Bitcoin a year or something like that, I mean, then the employer's not going to buy that in case Bitcoin goes to the moon. Suddenly the employer's gone from 100 grand to 300 or something like that. So,
True. They're essentially getting free resources.
Yeah, that's right.
So I guess moulding from that question then into spending cryptocurrencies as a personal asset in Australia, and I know the ATO has a little bit of information around that. Why don't you give us a breakdown on that?
Yeah.
And how and what are the kind of truths and misconceptions about actually using cryptocurrency to buy things in Australia?
Yeah, so the ATO consider Bitcoin to be an asset rather than a currency. So it also has guidance on personal use assets. So if you buy Bitcoin for 10 grand or less, it's below the personal use asset threshold. So then if you spend that Bitcoin, then to buy something for personal use, then it can be tax free. The issue that you've got obviously is if you buy some Bitcoin, then it goes up, and then you use it for personal use, is that going to pass that personal use asset test? And there wasn't a lot of guidance on that last year, but the ATO have since released their some guidance. You can look it up on the ATO website, and it just gives an example of someone who buys Bitcoin, holds it for 6 months, and then uses it to buy something for personal use, and the ATO treat that as an investment, and so any gain is taxed. Whereas if someone has some Bitcoin or transacts from, say, Aussie dollars to Bitcoin so they can buy a special offer that's being sold in Bitcoin or crypto because it's cheaper in crypto or something like that, then, and they do it pretty much straight away in this example, then that's personal use and there's no tax. So there was a bit of a conception among some people that if you buy for less than 10 grand and you just spend that Bitcoin on something of personal use, no matter when, if it's gone up or down, it'll be tax free. But the ATO they've clarified that in their guidance to say that if you do that but you're holding it as a bit of an investment as well, then it's going to be taxed. So that's the state of play at the moment.
So people really even need to be keeping track of purchases in Bitcoin, not necessarily just disposal, but actually using it.
Yeah, that's a good point. Yeah, I mean, if you're sort of using it for like a major purchase, so if you're paying your mortgage off or something like that, and you've had that Bitcoin for a while, then the ATO could argue, that's an investment. So, and I mean, their guidance seems to imply that. So you would have to. It's a disposal of an asset.
I don't envy the ATO at all. I must say, it's already complicated as it is, and I expect it to probably get more complicated in the future.
Yeah.
With more, not only more fiat on-ramps, but the development of applications which allow the procurement, the holding, and actually the purchase of multiple cryptocurrencies as well. Because you've got things like Shapeshift that allow change from cryptocurrency to cryptocurrency. So
Yeah.
I don't even, what would be the take on even that, converting cryptocurrency to cryptocurrency?
Well, it partly depends on your intention, and depends when you use it and how you use it. Like going back to that ATO example where they've given, where someone's gone from Aussie dollars to crypto and then they've immediately purchased something with crypto because there was a reason for getting into crypto for that purchase. It was cheaper. If you're doing that with something like Shapeshift, then you could argue that comes under that example. But then, if it gets a bit more complex or long term, or I think where you're holding the coins for longer, and then like if you cash out or make a bit of a gain, then there's an argument to say that you've actually, you have invested, and then it's a gain. So then it does become tricky with the record keeping, and yeah, it's going to be interesting for everyone.
It will, and I think that perhaps as the ecosystem develops and as the applications we're using for crypto storage and things develop as well, I think there'll be a space for apps that perhaps will contain a lot of that stuff within one to make it easy, because it's so scattered and dispersed at the moment.
Yeah,
I think it's challenging.
Yeah,
and I think that's a good. I personally take that as an indicator of just how early we still are.
Yeah, you're right. I think, like in the crypto world, obviously it's going to get easier to buy, to store, and to purchase with it. But I think if you compare it with something like online banking, where obviously you've got a card and you go and spend money, and you go into your internet banking, download your transactions, then assuming that the same sort of thing happens, with crypto, like if you've got a debit card, you can spend crypto on it. As long as there's a back end that stores your transactions and your transaction data. The difficulty is, as I was saying before, if you hold it for a while and then spend it and it's gone up in value, then it's potentially a bit of a pain. You might have to work out whether you've made a gain or a loss.
That's tough stuff. So I guess then just, finishing up this chat, it's been an absolutely fantastic chat. I've learned a great deal. What tips would you have for people around cryptocurrency trading, long-term investing, and other forms of procuring cryptocurrencies for whatever purpose in relation to their tax? What are some things people can do to make it easier for themselves and also save money?
Yeah, so you asked initially about sort of whether you're trading or investing. I think one of the things to note is that there's a distinction between whether you're trading crypto or trading Bitcoin. And if you're doing that regularly and it's got the appearance of a regular sort of profit-making activity, then you're going to get taxed like you're a share trader. And what that means is that there's going to be a gain or loss on all your transactions, and everything's got to be brought to account at the end of the year. And you'll also pay tax on that. Whereas if you're holding for a longer term, then you're an investor, and if you sell after 12 months, then if you are a genuine investor, then you'll get the capital gains tax 50% discount. So effectively, if you sell under those circumstances, your gain will be halved. So it's a really important distinction. So you need to understand where you're at, and it does sort of start throwing up questions around what's the best structure to have for your crypto investments, and if you're involved in trading, plus you've got some stuff that you want to buy and hold, should you have a different entity for that? Because it might be a good idea to separate them so it's clear you buy and hold is separate. And then if you want to set up a structure for your trading, is that better off from a tax point of view? Because if you have a company, you can cap your tax rate at 27.5%. But then you've got issues of getting that money out. But for the short term, if you want to accumulate and build, a company can be good. So understanding sort of where you sit as an investor, whether you're a trader or a longer term investor, is really important, because that has significant tax implications, and then you've got options around how you want to manage that best, and whether you want a company or whether you want a trust for your buy and hold and protect your assets.
So I guess, look, I just want to say huge thanks for coming on the show. I mean, I certainly appreciate it. I know the audience would really appreciate it as well. I learned so much, and it's such an interesting area, learning more about the back end and what's going on, the tax, the funds that are getting set up as well, and where the industry is going, because you can really tell that the whole space is maturing over time. still early days, but it's maturing, and it'll be so interesting to see where it is in 10 years' time. So again, thank you for coming on. I really appreciate it. If the audience want to get in touch with you or want to see some of the services you offer,
Yep.
whereabouts can they find you?
Yeah, so cryptoaccounts.com.au, email angus@cryptoaccounts.com.au.
Awesome. Now, guys, also there will be links down in the description to Angus's website as well, and I believe they can also book in an appointment with you too.
Yep, that's right. So there'll be a booking link to a scheduler. So happy to have a quick chat, a 15-minute consultation if anyone wants to just go through what issues you might be facing with your tax or want to investigate some sort of course of action. Yeah, happy to have a quick chat.
Awesome. Well, Angus, thanks again. Guys, I hope you liked it. Make sure to smash up the like if you did. And I'll see you in the next video. Cheers.